Do you think the last quarter of 2022 will show record earnings? 2022 is undoubtedly a challenging year for Tesla, with all the issues and challenges faced that make the stock reach a record low several times during the year. That said, many are hoping that Q4 2022 will at least prove to be an improvement over the past quarters. You would not want to miss this. Just after the New Year's celebrations, Tesla, through a press release, reported that it produced over 439,000 vehicles and delivered over 405,000 vehicles. According to the press release, Tesla's vehicle deliveries grew 40% year-over-year to 1.31 million, while production grew 47% year-over-year to 1.37 million in 2022. It was further stated that the company continued to transition toward a more even regional mix of vehicle builds, which again led to a further increase in cars in transit at the end of the quarter. Thank you to all of our customers, employees, suppliers, shareholders, and supporters who helped us achieve a great 2022 in light of significant COVID and supply chain related challenges throughout the year, the press release said. It was then announced that Tesla will post its financial results for the fourth quarter and full year ended December 31, 2022, after the market close on Wednesday, January 25, 2023. Tesla's net income and cash flow results will be announced along with the rest of the financial performance when Q4 and full year 2022 earnings are announced. Tesla vehicle deliveries represent only one measure of the company's financial performance and should not be relied on as an indicator of quarterly financial results, which depend on a variety of factors including the cost of sales, foreign exchange movements, and mix of directly leased vehicles, the said press release further stated. Well, this statement may somewhat but not entirely alleviate investors' worries about Tesla's Q4 2022 production and delivery numbers, which were below estimates. Simply put, the fourth quarter numbers fell shy of analyst expectations. According to a consensus of analyst estimates compiled by FactSet, a financial data company that lists more than 40 analysts that cover Tesla stock, as of December 31, 2022, Wall Street was expecting Tesla to report deliveries of around 427,000 for the final quarter of the year. Estimates updated in December and included in the FactSet consensus ranged from 409,000 to 433,000. Those more recent estimates were in line with a company-compiled consensus distributed by Tesla Investor Relations Vice President Martin Vicha. That consensus, published by electric vehicle industry researcher Troy Teslike, said that 24 sell-side analysts expected Tesla deliveries of about 417,957 on average for the quarter, and about 1.33 million deliveries for the full year. Although Tesla started production at 2 new factories this year, as well as ramped up production in Fremont, California and in Shanghai, it does not disclose production and delivery numbers by region. In the last quarter of 2022, Tesla said deliveries of its entry-level Model 3 sedan and Model Y crossover amounted to 388,131, while deliveries of its higher-end Model S sedan and Model X SUV amounted to 17,147. It can be noted that in its third quarter shareholder presentation, Tesla wrote, "Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. The rate of growth will depend on our equipment capacity, factory uptime, operational efficiency, and the capacity and stability of the supply chain." The period, which ended on December 31, 2022, was marked by challenges for Tesla, including COVID outbreaks in China, which caused the company to temporarily suspend and reduce production at its Shanghai factory. During the fourth quarter, Tesla also offered steep price cuts and other promotions in the US, China, and elsewhere in order to spur demand, even though doing so could put pressure on its margins. In an email to Tesla staff, Musk asked employees to volunteer to deliver as many cars to customers as possible before the end of 2022. In his email, Musk also encouraged employees not to be bothered by what he characterized as stock market craziness. It is also worth noting that Tesla shares plunged by more than 45% over the last 6 months. Even in December, several analysts expressed concern about weakening demand for Tesla electric vehicles, which are relatively expensive compared with an increasing number of hybrid and fully electric products from competitors. Still, Tesla is poised to reap the benefits of President Joe Biden's Inflation Reduction Act this year, which includes incentives for domestic production and purchases of fully electric cars. That said, Barron's, in a recent article, expressed the belief that Tesla earnings in 2023 are expected to grow roughly 40% from about $4 a share in 2022. Tesla stock undeniably had a rocky 2022, and investors hoped that the company's fourth quarter EV delivery data would help get 2023 started with a bang. However, it hasn't turned out that way, as the actual numbers fell short of expectations, much to investors' disappointment. Still, analysts expect Tesla deliveries to grow about 40% in 2023, hitting 1.8 million to 1.9 million cars, up from roughly 1.3 million in 2022. Notably, Tesla increased its sales volume by about 40% in 2022, with the company delivering 1,313,851 vehicles, up from 935,950 vehicles delivered in 2021. Tesla produced 1,369,611 cars in 2022, about 56,000 more than it delivered. According to data from Yahoo Finance, 22 analysts have an average revenue estimate of $24.96 billion for Q4 2022. The analysts have a low estimate of $21.1 billion and a high estimate of $28.79 billion, as well as a growth estimate of 38.8%. While many have a positive for Tesla in 2023, there are still several things that have Tesla investors on edge about expectations for this year. One of which is the China-based electric car company NIO, which recently lowered its forecast for fourth quarter deliveries by about 9%, citing the impact of a growing number of coronavirus cases in major cities in China. This gave Tesla investors more reasons to be concerned about how sales are faring in China. Another sign of potentially waning demand in China has been reports of Tesla reducing its production output at its factory in Shanghai. Finally, a move from Tesla recently to cut prices on its Model 3 and Model Y vehicles in the US has also raised concerns about demand for its vehicles. Some of these recent headlines are certainly cause for concern. However, it's extremely difficult to predict whether some of these issues are only short-term in nature as the company tries to address temporary challenges, or if they're indicative of problems that could persist throughout 2023. "I'm worried about the general economic environment," said Callow on Bloomberg Television. "Do people have the wallets to pay for $60,000 cars? That's what the market is worried about too." Some analysts expect Q4 Tesla deliveries to come in well below consensus. Morgan Stanley analyst Adam Jonas cuts his Tesla stock price target to a still hefty $250, but also slashed his Q4 delivery target to just 399,000 in late December. CNBC previously reported on Morgan Stanley's Tesla pick, where the analyst highlighted the investment group's optimism and maintained its price target for Tesla at $330, as well as expressed their optimism on Tesla's near-term future. While we see 2023 as a challenging year for the EV market categorically, we believe Tesla's gap to competition can widen, Morgan Stanley stated. However, as previously stated, Morgan Stanley's Adam Jonas cut Tesla's price target from $330 to $250. Still, that seems plausible as Tesla stock is currently trading below $125 per share. During the Q3 earnings call, Tesla CEO Elon Musk expressed his optimism for a record-breaking Q4. "I can't emphasize enough, we have excellent demand for Q4 and we expect to sell every car that we've made," Tesla CEO Elon Musk said in the Q3 earnings call. "The factories are running at full speed and delivering every car we make." Tesla shared its plans to push global production of its top-selling Model Y and Model 3 electric vehicles sharply higher in the fourth quarter and build on that growth in 2023. As newer factories in Austin and Berlin ramp production, internal plans reviewed by Reuters show. "As our factories ramp, we're looking forward to a record-breaking Q4. So it really, knock on wood, it looks like we'll have an epic end of year. So Q4 is looking extremely good," says Musk. If the production ramp-up goes according to plan, the global autos market's projected growth will jump by a factor of 10 in 2023, considering a 50% production increase for the entire year. Looking at Tesla's financials and the company's future, investors can get a better idea of the condition and perhaps the opportunity of the stock. Tesla has solid fundamentals, high earnings and profitability, low amounts of debt relative to competitors, and continuous growth in demand for all of its products. Looking at future product offerings offers more good news. Subscribe to Tesla stock for more.